Hello folks, welcome to another daily Bitcoin market analysis by Inspocrypto. I need to change the title because it's not a daily anymore. It's every second day or, I need to think about that. But however, I changed my mind. I just have a focus on Phoenicia already. So with Phoenicia, everything will change a little bit. But however, I'm not going to promote again about Phoenicia. We are going to promote nothing today. We are going to talk about a little bit about BRICS, a little bit about Bitcoin, nothing huge, but about gold, about some opportunities. And maybe then we can close a little bit related to Phoenicia. Because as you know, we are also, and that's part of our roadmap that we will provide to you, is also to launch an on crypto token for Phoenicia, just only as an alternative payment method, so you can pay your fees with certain savings, of course, but it will also be the pilot for tokenized funds. Tokenized funds means you have a token that has a collateral, and it will be something like a combined system between DeFi, so to receive some yield and at the same time getting some yield by the fund. So when you are buying, selling, and making some nice gains with your business, you will share your gains with the fund token holders. That's the whole system behind. I'm not going to go in detail now, but it's a very nice initiation for the next topic: BRICS, gold, Bitcoin. Because a lot of rumors right now are spreading around the whole community space. If BRICS is going just to push Bitcoin, because obviously it's a decentralized asset that it's not only transporting informations, it can also transport, value. So obviously, why not? It could be an alternative. But I didn't change my mind. When I received when I noticed the first time that potentially Bitcoin could be part of the BRICS strategy to create a new currency, or at least an alternative to the US dollar, I said it's not going to be a good thing for Bitcoin. Even currently, the BRICS states or union is making 25% of the whole global GDP, 25% already. They added even in some other countries, like, for example, Argentina. I think it was Argentina and some other countries joined now to the BRICS. So BRICS is becoming bigger, and even more important on the geopolitical level. And the US is looking more and more weak, while the BRICS is not pro-US dollar. That's another thing. So what does that mean? Let us talk about the scenario that the BRICS states say, okay, we will bring our own currency and we will bake this currency with gold and Bitcoin. What does it mean for gold and Bitcoin? What do you think? Imagine you are a country and you have a lot of enemies. And your enemy knows that your currency depends on the price of Bitcoin and gold. Just imagine that. And we know that at least the US big banks are experts manipulating the gold price, as we know already. But imagine they will do that with the Bitcoin price as well. I think they are also experts on it, but just imagine that. I mean, what if you know, just take this view, and you are the BRICS, and you are just thinking about to bring a currency backed by gold and Bitcoin. And your enemy, so the Western countries, Europe, USA, Canada, and just the opposite of the BRICS, let us say the opposite of the BRICS states, knows that. And obviously they will defend their own currency. So let us say they are not going to plan also to make such kind of currency reform and bring us a Western, an anti-BRICS currency, because if that happens, that means we are coming closer to a one government, one global government. We are centralizing more and more and more. That's the whole structure. So if that's going to happen, that would be crazy, because a lot of conspiracy theories of the last decades, well, those who said they are working on a world government and people said, that's not going to happen and laughed at them, maybe they were right. If that's the case, we need to see it. It's too early. In my opinion, at the moment, at least, it's not going to happen, at least for the Western countries. But if the BRICS is doing it, it will force the opposite nations also to do something to defend their economic interests. So it could be the next step after they launch their own CBDCs, because it will be just easier to migrate all their national currencies to one currency, for example. If that happens, now it's just a theory. But anyway, back to my question. What do you think would happen if the BRICS just do that? I mean, to let go up the price of Bitcoin in gold would be a big, big favor to the BRICS states. So do you think those who are anti-BRICS will allow that? That's my question. Because then we are not just talking about a free market, then we are talking about a free market with a geopolitical impact. And geopolitical impact means sabotage. It means, it means to bring the same products just in lower prices. It means a fight. It means a battle. It means a war of currencies. And that's what we have been talking since a while, that I said that's going to happen. And now more and more is the whole topic is becoming more sharp that that's going to happen. It's just a matter of question when it happens, a matter of time, but it will happen. And the question is that something good for Bitcoin? Is that something good for gold? We know historically that even Western countries even forbid to own, at least for private holders, gold. They seized even the gold of private holders. So it could happen again. Well, it's going to be a little bit difficult with Bitcoin, but also here it's the question. First of all, if BRICS are going to do it, the big question is, all those 20 million of Bitcoins, we need to have a nice distribution overview to see who are the biggest holders. If that's mainly BlackRock, MicroStrategy, and some big American banks, holy shit. It would be a little bit difficult for Chinese, Russians, and all the other BRICS state to maintain or control even the asset that they use to bake their world currency or their own BRICS currency. So, is it clear, the whole distribution structure of Bitcoin? At least not for me. Obviously, those countries and nations have other access to information. Maybe they know much better, but I don't know it. I can imagine that a lot of those Bitcoins are in the hands of American institutionals, or at least opposite BRICS country hands. I can imagine that will happen, or it's real. That's what's happening. So in such case, will they do it? And then, what does that mean for Bitcoin in general? In Germany, we say when two guys are fighting, usually the third one will win. So indicating those two will fight, and obviously one of them will maybe win the fight. But usually with a blue eye, at least one, if not two, and a broken leg, or maybe two. You know? So the third one, the only one who is just watching the fight, will win, because, you know, at the end he is untouched, and at the end he will be the winner. In my opinion, that would be the best case for Bitcoin. Don't be a headline. And don't be an instrument of a geopolitical fight or currency war. That would be the best case. Because that means to me that Bitcoin at the end could win. But even the community, or not the community, but even the media related to Bitcoin are pushing and celebrating it like it would be fantastic. It will be not, because then Bitcoin will become just a tool, an instrument to use it to fight your enemy, like gold. You remember, even in 2021, I said I'm extremely bullish on gold, because if they really, and it looks like they need to do it, if the central bank starts to evaluate the gold reserves they have, just to neutralize, for example, their books, means they need to re-evaluate the gold price by, some experts say 10 times, some others say 6 to 8 times of the current value of gold. Some others say even 20. So it would be even much more bullish than Bitcoin. And now some others are saying next year, because of the whole environment, mentioning that BRICS could use, for example, Bitcoin, or that a lot of USD will just shift to Bitcoin, because those BRICS states will start, and they are doing it. We know Saudi Arabia and China are dumping treasury bonds, so that they are going also to sell all their USD reserves. Obviously, with all the money, with all the USD supply circulating in the markets, if they flow all their reserves to the market, the US dollar will nuke. It will nuke. So will that happen? Is what we are seeing. Some others are saying 25k is the key level. They will accumulate at 25k. Why at 25k? Some others are saying, yeah, and they will push up to 120k next year. Making a favor to others? Do you think the US government is going to allow that? Or even the Fed? That's my big question. I don't have the answer here. I'm just making the questions. The answer that I have in mind is no, they will not allow that. To make a favor to China, Russia, and co? Obviously, they will try absolutely everything. You remember Fed now? You remember all the structure and system that the Fed and US government is constructing? To control even the liquidity that goes to Bitcoin? So it's going to be extremely exciting in the next years what's going to happen. At least if the BRICS are really going to create an own cryptocurrency that's backed by gold, that's a good indication that crypto is going to be the asset of the future, as mentioned so many times. And that's why I'm so bullish on crypto in general, long term. Long term, guys, long term. Absolutely. And why I'm spending that much of time also with Phoenicia and creating this project. Because it's going to be not only my future and hopefully also your future. We will start as a community like Inspocrypto did over and over the last years. That's what we did. And in my opinion, tokenized funds are going to be the key changer. Not only institutional banks, institutionals in general, but banks in particular have said that so many times. They are so extremely bullish on tokenized funds. And I think they are absolutely right. If you have an asset that could maintain the value of your token, and it's not a stable coin, because a stable coin is a completely different asset. It's 100% related to its asset and mainly to a fiat currency. A tokenized fund, you can take everything. It can be art, it can be gold. You know, obviously we have also stable coins backed by gold. We know that. I like that. I was holding it. It makes sense. But it's not even a stable coin. Is that a stable coin? I mean, even USDT, Tether is doing it, right? They said they are just selling treasury bonds to buy Bitcoin and to buy gold. Oh my God. Is maybe Tether the next BRICS currency? That will be... If that's going to happen, then I don't know. I really don't know. But back to topic. The next years will decide the future of crypto and the future of Bitcoin. I don't know what will happen with all these spot ETFs, trust applications. In my opinion, they will not allow that. In my opinion, it's too early. We need to regulate the whole market and then we can do it. In my opinion, that's not going to do it. But it's also just my theory and maybe even my bias. It will be absolutely important, the next moves on global stage for crypto in general, but in particular for Bitcoin. And as said, in my opinion, the biggest opportunity related to crypto and scalable will be tokenized funds. But, you know, tokenized funds, obviously, with the right fund asset. Also here, if you start to take real estate, while you know that the real estate market, even I would say globally, is a huge bubble, that's not going to work. But combine a tokenized fund idea with DeFi could be an absolutely game changer. So for today, let us start again with the Bitcoin market analysis. Anyway, yes, it's for free. This analysis is from now on absolutely for free and available for everyone. Nobody is paying for this analysis anymore. I stopped to charge anyone for this analysis. And I have explained in the past why. Because I'm working on Phoenicia. That's going to be the project of Inspocrypto, where he is just creating and developing an academy where one analyst, Inspocrypto, is creating a platform for analysts and traders, indicating, just for those who still don't know what Phoenicia will be, and obviously, I mean, we have a huge lack of information, and that's what I also announced, that we will do that and bring more information about Phoenicia, is it will be a platform where analysts will have a space and all the necessary tools to analyze the market, to publish their analysis there. At the same time, we will have such kind of marketplace where if you are developing your own indicators, for example, or even apps, you will have a marketplace where you can distribute your apps and your indicators, for example, to everyone. And at the same time, we will have a big, and when I'm saying really big, a big library where we will explain every single indicator, like, weights ratio, for example, related to on-chain, or the Greeks related to derivatives, in particular options, or what is, for example, Contago, what is related to futures. Every single topic, every single indicator, and 3 different skill language. For the newbie, those who are always making questions like, could you explain please, like I would be 5 years old. For those trader, so those who are beginners and those who are experts. And sometimes an expert has a lot of knowledge about a lot of indicators, but he is missing, for example, in particular when it comes to Bitcoin, what is UCHO, for example. Is that useful? Brings that some value to my analysis when I'm starting to make some Bitcoin market analysis, for example, and so on and so forth. It's a lot of work, but I think the result will be amazing. And it will give you all the tools necessary, not only to make your own analysis, but at the same time also to see and to have a good knowledge about if the analyst you are following is telling you something useful or just trash. Because that's something that I'm missing since a while on Twitter analyst community, that some people are just extremely bullish or extremely bearish, but they can show you really with data why that happens. So mainly it's a lot of BS and shilling or sharing a lot of fear without to bring any evidence on the table. And as a trader who is following those analysts, it would be a key changer if you had the knowledge just to see that what he is sharing is just bullshit. Okay? So I look forward to have a lot of discussions in the future where you can say, Inspo, what you are showing here is bullshit. So let us go forward. 24 minutes. Not bad, not bad. We will make it even better. So in the future, I will take some vacation from next week, Friday. I will be off for 2 weeks, but afterwards, I will be more on Twitter again. I will keep providing this analysis, and I will research even more, like in the past, where I can use the initial comment to provide my view about the opportunities related to crypto, but also talking a little bit about the geopolitical environment and so on and so forth. So let's go and let us take a look what the market is preparing for us. So today we had a little bit more volatility in the market due to the Powell's speech. Let us make a little summary to understand why maybe the market reacted as it reacted. First of all, he noted that the Fed may need to raise interest rates further just to reduce more the inflation, because he is not stupid. As mentioned so many times just before, that inflation comes in waves. He is also indicating, well, first of all, they have the target of 2% inflation. That's what central bankers always love. But they know if they need to raise more interest rates, because when the next wave starts, because they are, they start to reduce even more the crude oil production, if the gas price starts to lift up once again, and so on and so forth, they will be in big trouble. So what he is saying makes sense. And that's what I was saying so many times, that, that, for example, pivot will not just happen just because we had one inflation wave. It's not going to happen, because it will be for the central bankers. I mean, we know they don't have any kind of options anymore, but it would make that the whole environment even more, more challenging. I mean, even his concerns that he expressed today, saying that the economy is not cooling as expected, because consumer spending remains robust and housing sector is maybe even rebounding. It's stupid, but people are saying, hey, that was one again, just pure smoke. Nothing happened, everything is fine, and we will go forward. In such case, they are just knowing that's not going to end well, and they need to rise even more interest rates. And anyway, they can do it, but it will have a different impact for the housing market, for the shadow banks, and so on and so forth. So it's just a matter of time. And yes, it takes longer than I was expecting, but it will happen. So anyway, all what he said was partly a reflection of what the Fed has in mind when it comes to if they will rise more the interest rates. So he is saying, yeah, we will. It looks like, yes, we will. And so the market knows, fuck, cheap liquidity is not going to come very soon. So obviously what they are doing, and that's not positive, obviously what they are doing is taking liquidity from markets, like, for example, not only Bitcoin. I mean, if you check SPY, for example, it just dumped a little bit. If I was looking, yeah, it dumped, and now it's back. You can see that the Fed net liquidity indicator is showing us that it seems they are still receiving more liquidity on the other side, and so pushing up the price, I guess, once again using 0 DTE options to push the price up. So that's how it looks, and that explains why we had some volatility today, because it wasn't bullish, but it wasn't really bearish. So in my opinion, we will maintain the current price, and then we need to see, in my opinion, we will go more down, but it will take, like it happened just in the last few months or weeks, at least weeks. Anyway, if we check the weights ratio, 1 day time frame, we can see here, for example, that's indicating 45% yesterday. So it maintained a range that's indicating that at the moment the weights ratio 30 days moving average, it's almost at 50, it's at 49.4%. It will decline a little bit, but it maintains relatively high, indicating they are still sending more bitcoins. And that's really paradox at the moment, because at the same time I'm noticing very strange things. A lot of outflows of cold wallets of spot exchanges. It doesn't make sense. It looks like they are bank running. And I don't know why. I mean, why to take all these bitcoins from cold wallets? Are they just taking them to accumulate or just to have them in a safer place? That's absolutely something I don't know. But it looks really strange. Really, really strange. Anyway, we go forward and we see here, as mentioned, nothing really changed in the last days. If we check here, for example, that's the 1 hour time frame. Once again, they dump a little bit the weights ratio 1 hour time frame, indicating they want to let the price go up. When the price was up, they started once again 99%, indicating they were sending more bitcoins. They sent 3,460 bitcoins in net flow, indicating more inflows through spot exchanges than outflows, while the weights ratio 72 hours moving average is stable at 88%, something that's relatively high. And that's a bad combination. The yellow, what you see here, the yellow line is stablecoin reserves on centralized exchanges, and it's declining. That's the trend, indicating they are sending less stablecoins and liquidity to centralized exchanges. Let's go forward. So, for example, here, if we check the live net flow premium, it looks incredibly paradox, because that means that would be under normal circumstances, I would say that's extremely bullish. Go all in long with a leverage of 5 or 10 and you will make a huge trade with that. But when I check the trades or the transactions behind of this net flow, it looks strange. Bybit, outflow, 4,000 bitcoins. Bybit, then you check the CBD, it doesn't make sense. It doesn't just make sense. 4,000 bitcoins coming from where? Coinbase, cold wallet. You remember, 10,000 bitcoins outflow from cold wallet. So the net flow here, it's just telling you inflows to spot, outflows to spot. It doesn't say they bought or they sell. It's just telling you a transaction happened where someone is taking out 10,000 bitcoins from Coinbase. That's it. Then you check and you see it's a cold wallet. It's not a hot wallet. So where's this bitcoins coming from? Who is sending all these bitcoins out of Coinbase and why? Also happening to Binance. Also happening to Bitfinex. Why is that happening? And yes, it looks extremely bullish taking into account all this. But why is that happening? Are they just taking out because they know that something will happen to centralized exchanges? And they are just shifting to personal cold wallets? Or were these guys accumulating since a while and now just taking them out from the exchanges? It's a mysterium a big mystery for me at the moment. It looks extremely strange. But when they start to sell, they are not just selling few bitcoins and no one is buying. They are selling big. So someone else, and they are not just accumulating big amounts, at least due to the fact that we are having those big outflows, we can't see really how much bitcoins are arriving on centralized exchange. So it's a really interesting scenario I never had just before. It looks extremely fishy, extremely strange, but I don't know how to interpret the current situation, to be honest with you. If you check that here, It's, we had just a little bit of red bar, so they sent 30, 40,000, and now they are buying in more and more and more. At least if we interpret this in that way, that they are buying, it just tells us they are taking out from centralized exchanges. They are sending to centralized exchanges. They are taking out from centralized exchanges. Here the same. They are sending more to centralized exchanges. They are taking out more from centralized exchanges. That's what this chart is indicating. It's not telling anything about buy or sells. Now check that. I mean, check that. Usually I would say, that's huge. That's extremely bullish. Go all in. Sell your spirit. It's a very, very, very safe trade. But if you check the outflows, it doesn't make sense. It just doesn't make sense to me. And I don't know. I really don't know. But I think we will go more down, and I can't understand what's happening here. Maybe the whole thing, I can't imagine. That's just a theory, that they want to have a spot or centralized exchange crash or something. But why? To kill Binance? That could explain such kind of hiding bank run. To have all their Bitcoin safe. But is that the case? It's really hard to say. That's the problem. That's really hard to say. But it looks, because it's absolutely paradox. Let us go to the next chart. Bearish. Crypto, 300 millions in. USD, 170 millions out. Also here, it's just a net flow. It's indicating that they sent 300 millions more in crypto to centralized exchanges, and they were cashing out. That's not bullish. That's a bearish balance. And that's not the first time. BTC, 320 millions in, 146 millions out. Bearish balance. USD, 550 millions in, 575 millions out. It's neutral. I would just say we have here a delta of almost 24 million US dollars. It's neutral. It's the first time since a long time that's almost neutral. Ethereum, that's actually here 12 hours. That's only 12 hours. Big transactions. Don't see any Ethereum outflows, it's almost inflows. XRP is almost the opposite. It's almost bullish. They are buying a lot of XRP over and over again. And well, we are at 39 now. You remember where I said, let us go a little bit more up, and you will see that also the fear and greed index will go up, because in general the sentiment of the market is bullish. And that could be maybe the problem and the trap at the end of the day. It seems that DeFi Llama is here once again. Auditor, last audit date. They are bringing more data, so we have a lack of data here, it seems. But spot volume in the last 24 hours. I don't know if it's the same unchanged data, because it looks very familiar to me. But if it's right that we have 3.7 billion in spot volume in the last 24 hours versus 6.6 billions in open interest, that's at least good for spot, because usually we had something like 3 billions and 9 billions in 24-hour open interest. But if we check, for example, unusual whales with the crypto whales chart, it looks completely different. 57% of the whales are selling Bitcoin, only 43 are buying. If we check this time, yeah, BTC USD is still the pair leader, but it declined a lot. Look, USD, 12.5%. So they are selling to convert in US dollars. That's my interpretation. Because Every single time we had 50-50, or it was maybe even buys, we had more stable coin shares here and almost 4%, 3% USD. Now we have 12.5%. That's big. And even here, it seems it comes mainly from Bitfinex. Because Binance, usually with 95, 96, 94% of market share, at least exchange breakdown, it's not a market share, but now 87.5% and Bitfinex 12.5%, while the BTC USD, it's 12.5%. It's one of the biggest since, I don't know, but at least 2-3 months. It looks really strange what is happening here in the market, and we need really to be extremely careful. Also here, CME, you remember, I mean, nothing have changed but shorts and longs. And we are really talking about a lot of difference here. We are talking that 1.7, almost 1.3 billion in shorts and only 300 millions in longs. Related to hedge funds, I'm always just checking the hedge funds because these guys are extremely gamblers. So yeah, if we go forward, because we are talking about liquidity, and we check what's happening, for example, here, nothing has changed. So it declined almost by 1 billion in Tether market cap, and it's maintaining. We had on TUSD a change, and that's something very interesting. At least yesterday was the case. Look there. So someone is now, we are talking about 200 millions, using more TUSD than USDT. Is Binance maybe trying to push up? I don't know. I really don't know. We are missing a lot of things here, but something is happening, and that's really crap, because I think I don't know. I think hopefully not, but we will. Yeah. Everything looks not really solid, but my sentiment and trader experience is telling me that something huge is going to happen very soon. So that's it. Let us go forward. So related to futures, nothing has changed. The open interest lifted up a little bit, even the leverage ratio lifted up. Yesterday we almost liquidated 500 bitcoins in longs and only 82 in shorts. The funding rate is lifting up. That's an aggregated and large time frame chart, 1 day time frame. That's the resolution here, but that's it. And where I like to check more is what is happening on Binance. For me, the most important one is Binance. And Binance, once again, is showing that we have almost a long-short ratio of 71-29. And that usually, and you remember, before we nuked last time, well, we didn't nuke, but I said we had almost the same ratio, and I said, it looks bullish, but usually then the market does exactly the opposite. And that what happened. We went just down. And in my opinion, that's going to happen again. Bitfinex, less longs or maintaining unchanged, more shorts coming in. Yeah, that's basically everything here. So let us go and check the options next. So related to options, we see that bears are still extremely hot on 26k, but also the bulls. Only that the bears are here much stronger than the bulls. The bulls would like to hold or even to be at 26k. I'm missing the price right now. We are almost at 26k, where I said, you remember where I said we will see 26k, and then we will fight there. Don't forget that the max pain of the quarterly expiry, so end of September, is 27k. It's yet. We will check next, but it's the next one. So, and we see here that the gags did something that usually it makes the opposite. But we had today our expiry, the monthly expiry, and you can see what happened to the gags. It pushed up from minus 208,000 to now 62,000. That also indicate us we can go more down than up. Now maybe I should refresh all sites just before we go forward. But if we check now the quarterly expiry for, it's still 27k. So usually it would make sense to see end of September, so in almost 1 month, another leg up hitting 27k. Afterwards, you can see even here, for example, end of December, the max pain is 27k. Only just for November, I think it's lower. No, it's also 27k. Jesus, but October was lower. No, it was even higher, 28k. So it is possible. I mean, the only max pains that make sense usually are the quarterly expiries, because those are big in volume. But we missed the last, also in August, wasn't that small anyway. So we need to see. Now we talk now about the strategies, and we see that short risk reversal for today is the biggest position when it comes to premium USD, 1.7 millions. Long risk reversal, 750,000. Both are like shorts and futures based here on options, and long the same. It would be like a long future but based on options. So we have shorts positions with a premium of 1.7 millions and here 750,000. Then custom strategy, no one really knows what's behind, and bear put spread, that's usually something that's bearish. That's it. I always check the top 4 based on premium, because that hurts your wallet. So let us check what's happening here. Short risk reversal. And we see that these guys are here. Wow, that's really tiny. They are just telling us that until end of the year, they have a liquidation level of 28k, but expecting to see a price below of 25k. That's what they are saying here. If we now check the long risk reversal, and I mean, it's not tiny at all, it's not small volume. So if we check now the long risk reversal, we see that they are, well, doing almost the opposite. At least if we check the biggest one, that would be here, the biggest ones. Yes. So if we check here, we see that they are making a bet. Instead of 28.25, they are saying 28.24. So they say until end of November this year, we will break 28k and push even more up, but their liquidation level would be 24k. If we go to 24k or even break 24k, then it's they positions will be liquidated. Custom strategies, like for example in futures, it's would be something similar. So if we check here, for example, custom strategies, we have here multi-leg. As mentioned, it's really difficult to say what's behind. They sold puts 23k for end of the year. They sold call 34k for end of the year. Instead they bought now put 25k. Does that mean they sold those two here just to buy the puts 25k? Because if we check the premium, they received almost 116,000 and they spent 108,000 afterwards, or at the same time actually. So is someone now flipping and saying, we will see a price below 25k until the end of the year? So that's my main bet. That's the problem with custom strategy. We don't really know if they are making this trade just as a combination to another strategy that they are running, or, you know, if my interpretation is here right. If we check, for example, here, we can see they sold, for example, calls 40k for end of the year, and they both even led lots calls 31k for the same expiry, and they spent even more money. That's almost indicating that someone here is a little bit pissed. I think once again, we don't know what's behind. That's just an interpretation right now, because we don't know. It's a custom strategy. That's the problem. But if I take a look here and I see he is spending more in premium, he's buying less lots, he's reducing his expectations from 40k to 31k. It's indicating me he's saying, I need to minimize my risk now. Because he is now realizing we will not see a price of 40k or even above until end of the year. So, yeah. And then bear put spread. And the bear put spread, if we see something big, that's not really huge, but it would indicate us they are expecting to see a price below 20k until end of the year. But it's not big at all. It's really not big at all. Do we have a big trade pair? No, it's almost a retail here. I mean, sometimes when I see, for example, that they are trading, for example, here, you know, it's possible that that's the same trader, because he is trading the same expiry, the same strikes. It could be it, but we don't know. So that's it also from here. So if we check, we see, for those who are watching my analysis today the first time, we are now analyzing. Jesus. We are taking a look now to the CBD charts. Cumulative volume delta. For those who don't know what that means, check this here. That's Trading Light. That's an app I really like and using a lot of times. If you check that, you will see here volume. Okay, I'm using 1 hour time frame here. So what he is measuring right now is the current volume. The candle is now almost 4 minutes old, so it's relatively new. And he is showing me the current purchases, the current sales, the total of the volume. So buys plus sells makes a total. And he's showing me here the delta. That's the delta of the 1 hour candle, the current one, that's now, as you can see here, just 4 minutes old. Okay? What does the cumulative volume delta means? It's, for example, if you're checking, that's also the CBD, if you're checking 1 hour time frame, it's indicating this volume delta, so the delta, what I showed you, plus the volume delta we had 1 hour ago, plus the volume delta we had 2 hours ago, plus the volume delta, and so on and so forth. That's the cumulative volume delta. And that's what we are using here. We are just checking the volume, the CVDs, cumulative volume deltas. For example, here, that's only Binance. It's only Binance BTC USDT. This here is the whole aggregated. So everything combined with Tether. Okay? we have Kraken, Poloniex, Coinbase, Bittrex, Bitstamps, Bitfinex, Binance. This year's only BUSD, so only Binance, and this year's only USD pairs, only CBD, and it's Kraken, Gemini, Coinbase, Bittrex, and so on and so forth. And we have the CBDs also for aggregated CBDs, futures. So now we are talking about perp, about futures, coin margin contracts, means you are using your bitcoins as collateral to open a position, a futures position. Long or short doesn't matter. Now the long short matters, but it shows you here the CBD, for example. The CBD is indicating here they are shorting more than longing at the moment. That's what they are showing here. So they are using their own bitcoins at the moment to short the market. They are just accumulating shorts, it seems. Here, the trend as well. Here, it was the opposite. Here, for example, we are talking about stablecoin margin contracts, indicating you use USDT as a collateral to open a future position. That's the most common way how to trade futures on crypto. Means they were here just pushing, so opening more longs, buying longs, selling short. That's what they were doing. So it's really important to check if we see here something different. So I see that Tether pairs on Binance, the King exchange, but also the aggregated, it's still in distribution. Means they are selling bitcoins to get USDT, and that explains why the USDT market cap is reducing. They are swapping, they are redeeming, they are sending back these tethers to treasury, and they say, hey, give me money. Well, tether terms say money is a flexible term for them, because money could be treasury bonds, gold, whatever. Maybe you receive a box with gold bars instead. Anyway, BUSD is doing the opposite. BUSD is following very well the current price, at least not perfectly. For example, here you can see that they just purchased here. That's US dollars here. So you can see from 722 to 4 millions, someone purchased here 3 millions more than they sold at the same time. That's the volume delta. And USD looks also more bullish than bearish, because if you check here, we started here at 30, almost 34 million. Now we are talking about 88. So let us say 50 millions more in the last 2 days, indicating they were buying more with USD, so buying more Bitcoin with USD than selling Bitcoin with USD. That's what this chart is indicating. But as mentioned, it's aggregated. Okay, so and the same here. So now let's go forward. We see now BTC TUSD on Binance, and it's just indicating they are distributing more, so they are selling more than buying. We see BUSD, we were talking about that, it's the opposite. Now we see Bitfinex, BTC USD pair, it's indicating also here they were distributing a long time. Now it seems that it looks very similar to the price action, to be honest, but they were buying more than selling, and they started to distribute here. Okay, so if we go forward, Bybit extremely bearish at the moment. They even sold here big. Also here you can see that the volume delta, the CBD there, just dumped a little bit from 1,500 bitcoins minus to 2,200. It means they in few hours the CBD declined by almost, what was that, 700 bitcoins. That's big. Opposite on Coinbase BTC USD. So also here, for example, indicating that they were just at the same time buying instead. We see BTC USD on Bitstamp, for example. They are doing something similar to Bitfinex. We see that Kraken with BTC USD is also pushing up. And we see Gemini. And Gemini is also BTC USD. You can see that they are also pushing up here and not distributing. They are more bullish than bearish. And then we can see here that's only BTC USDT perp on Binance. I'm just using it because we have here a POC at the moment, and you can see that the POC is now just acting as resistance. Only if we can break this one and push more up, as the market is mainly more driven by futures. Jesus. You can imagine if we bounce here and push up, that's what the market price will do. But if we fail, also means we can go more down. And you see that the trend at the moment is looking more for shorts than longs. That's aggregated. Even we know that on Binance it's absolutely the opposite. And then finally we have here a list of all funding rates: Binance BTC USDT, Binance BUSD, and for the last 8 hours. That's the most usual cycle that they are calculating the funding rates on every single centralized exchanges by 8 hours. So we see that they are demanding a little bit more longs than shorts. On Binance BUSD more than with USDT. Deribit extremely, they are really demanding more longs. But everything else, OKEX USDC almost neutral. Even with USDT is almost neutral. Kraken as well. But here, coin margin contracts. It looks more bullish than bearish. At least on Binance, it seems they are longing more. And Bybit, they are longing more with coins, so with their own Bitcoins. And usually to close this chapter, what's happening here? Sometimes I have some problems. You see that nothing has happened. So USDT, for example, looks they are distributing, they are cashing out, they are taking out stablecoins USDT from centralized exchanges, supply on centralized exchanges, was lifting up, now declining. But if we check the inflows and we check the outflows, it's also here indicating that they are really selling Bitcoin for USDT. And if we check USDC, usually it is the opposite. We see it lifted up and declined once again. If we see the inflows and the outflows, well, I would say they were just taking out, so cashing out, sending more USDC. Then the price pushed up. You can see the Bitcoin price here. So they sent more USDC, they pushed up the price, and they were then afterwards, you can see that also here. Now you can see how much outflows they had, also indicating they used that just as an exit liquidity to push up the price, and they started to cash out, and that's what they are doing now all the time. To be fair and to understand all these charts, a lot of algo trading use stablecoins. So obviously they send stablecoins also to drive the markets. And at the moment they are more cashing out, and that explains also why also the unusual whales chart was showing us that 57% of the whales or the biggest transaction were more selling than buying. That's it. We can obviously check a little bit some other useful informations. For example, what miners are doing. we can see here Bitcoin miner outflows. So we are checking here how much outflows miner wallets have at the moment here. It's okay, 5,400 Bitcoins. We had, for example, the day before we started to dump from 29,400 to finally 26,000. They were sending more Bitcoin, so 14,000 here, 14,000 here, then 8,000, and then 19,000. Then it declined a lot, and now it seems they lifted up again, but we didn't came back to these levels here. So if we go forward, we see that fund holdings are declining their Bitcoin positions from 696,000 we had before. Now it's indicating 687. So let us say around 9,000 Bitcoins less since July 10th. And that's finally the last chart I like. It's the trading volume ratio. That's giving us a nice view what is driving the market right now. It's indicating so the spot volume compared to the futures and options, but it's mainly futures volume, started to lift up a little bit, indicating there were, you know, the futures volume maybe declined and the spot maintained, or the spot lifted up while the futures maintained. And that's the only thing. Something really helpful, because sometimes you see, for example, a sharp price move and you say, wow, they were buying a lot, but they were not buying a lot because they did it mainly with futures supporting it, only with spot. And that's what happened many times this year. It started in January, where the futures volume rised a lot while the price were lifting up, indicating they used mainly futures to push up the price and selling afterwards spot. And the same happened here, and afterwards even here to maintain the price, for example. But recently we started to lift up while the price was declining, so indicating that spot volume compared to the futures volume started to lift up a little bit more. That's it. So, and in this chapter, usually I'm just checking the liquidity on exchanges. So checking, for example, we have to the downside, you can see the liquidity there, just bringing here to protect the price. So for example, they are buy orders here. We have buy orders on Coinbase at the moment at a price of 25.5, 167 Bitcoins, 155 Bitcoins here, another 300, almost 300 Bitcoins here. So they are now bringing here some liquidity. Usually it could be spoofing, means it could disappear again, just to attract now some longers and buyers, and to say, oh look, it looks really good protected, so I can buy because only up. Sometimes that's a trap. They remove all this liquidity and the price goes down afterwards. So that's something you always need to have in mind. This year's our volume profile indicating we have here our spot, our POC. So that's almost acting as a resistance at the moment at 26K. So usually we should maintain, and we can go even more down or even go more up. But on Coinbase, really interesting that they are bringing some liquidity here, usually indicating we should go up from here. Bitstamp, they removed a lot of sell orders, but nothing have changed here. The biggest liquidity position and concentration is at between 23 and 28. Now Binance BTC USDT, where they are now waiting here at 26.8. So we have big sellers, 224 bitcoins waiting there. And usually when you see that here, usually the first thing I would see, because they like stupid formations, is push up, double top, and down afterwards. But also here, Binance is the spoofing king. Be careful with spoofing. Also here, they are bringing more liquidity to the downside. Now we have here a bigger sell order. Could happen that we go up hitting 26.8 and then to go down once again. So BTC TUSD doing almost the same, 27 here, some sell orders waiting at 26.5, but liquidity to the downside almost nothing. Also interesting. Now BTC BUSD, yeah, almost unchanged. A lot of liquidity to the downside. But Bitfinex, BTC USD, they are waiting at 25k at the moment. So if we go down, they would just trigger this buy order of 125 bitcoins. But Bitfinex, also be careful, because Bitfinex is well, I don't like Bitfinex at all, but sometimes you will see that we have a lot of flash orders here. Sometimes it's algo spoofing and so on and so forth. So OKEX spot, BTC USDT, nothing to see here. Sometimes it's helpful to see here the order book, thermal vision, to see, for example, where what is happening, where when you see, for example, here how the order book thermal vision is indicating they wanted to push down the price, and it seems, because we are talking here about spot, it seems they started to push up with futures afterwards. That's very interesting. Kraken, XBT, so BTC USD, also here indicating they were waiting even at 28k, while they are also bringing more liquidity at 24.2. Qcoin, also waiting at 25 and a little bit lower. BitMEX, wow, BitMEX is now waiting at 25.2. And now derivatives. Bybit derivatives, BTC USD. You can see here also the CBD, nothing big happening here. Now BTC USDT, also here nothing big happening. Now BTC USDT on Binance. Look, all these here is liquidity waiting to go long, and those here to go short. And usually when you see that, usually, because here it wasn't the case, but usually when they do that is because the big part of the market is driven by futures. And that means usually, hey, we don't want to let you down. But sometimes, like they do here, someone is going to sell big, and the only thing what they are doing with that is just really to reduce the pace of the price instead of nuke. So, you know, just to go down hard, they are just going long at the same time. Doesn't matter, because we don't see what leverage they are using, we just see the volume. So we see, for example, here we have 770 bitcoins waiting, so liquidity to go short with 770 bitcoins. But they use that sometimes really only to drive the pace of the price, you know, because if they want to buy, for example, they can use the futures just to let the price be stable and they can accumulate there, or sometimes really to control the price so that it doesn't trigger a chain reaction, for example, that many starts to get panic and start to sell, and that could be a very uncontrollable situation. So that's what they like to do. BTC BUSD, nothing. They removed liquidity here to go long, so nothing here. Now Bitfinex, you can see that they triggered their long order here. For example, it wasn't really a big one, as I know. It wasn't really. No, 12 bitcoins at 25,500. But I mean, afterwards we went up, and now we are going down. But Kraken futures, nothing. OKEX futures, nothing. Qcoin futures, only waiting here 27,500 to go short. And Deribit is the last one, and Deribit also looking very interesting, because we have here liquidity to go long and we have here liquidity to go short. So also here very possible that we can go up before then more down, or just really go up, double top, and then go down. And that's it. So today it was really a long analysis, just because I know that many of you, those who are now have access to my analysis, and many of you are not familiar with my analysis and all my data. So I had to explain, but I'm not going to repeat that. So from next Monday, I will make the quick overviews, so explain only if I'm noticing something that would be useful for us. I will talk about monetary policy, geopolitics, some other informations, or sometimes we will receive, or we can receive, any kind of events that could have an impact to the Bitcoin price. That's where I start to talk about that in my initial comment. But from now on, what I want to do is to give you the required informations and data view to adapt your trading to it. Okay, the only thing what I'm doing, so my personal conclusion in the past was almost making a little bit a summary of all the data we have received, making a personal interpretation, and say I would go long, I would go short here. I'm not going to do that anymore. Only if it looks extremely solid to me. But today I wouldn't expect anything. So if we check the liquidity in the exchanges, it looks more up than down. But at the same time, I know they love to use a lot of spoofing. At the same time, on Binance, long-short ratio is extremely bearish because it's extremely bullish. So the market loves to do exactly the opposite. And even on Bitfinex, we are receiving more shorts. The funding rate is not declining. So it's not indicating, even the aggregated one, it's not indicating they are demanding much more shorts instead. They are demanding more longs instead. So also here, it would give me more a tend to say, if I would trade right now and I'm not doing it, I would short. You remember maybe some of you my trend line. This is a trend line that's a big bitch, because we were trading here a while, and every single time we were just trading around this trending line, or we had sharp price moves. Everything started here, we went down, then sharp price moves means to the up and also to the downside. We had here the resistance, then finally we pushed up. We did such kind of double top, and then we started to go down. And also here, the first time it bounced, the second time with a sharp price move to the downside, really hard to the downside. Then we went up, we retested the trend line once again, another sharp price move to the downside. We did it again, and the result was again a sharp price move to the downside. So this year we tried this, and only here in June we had the big price move to the upside. So if we go once again down and we maintain and break to the downside, we could go directly to 15-16K again. So that's why I call this trend line a bitch, because usually it will liquidate a lot of people if that happens, and we are coming closer. So 23K could be it if some option traders are right, and we will see a price below 25K. Then pay attention to that here, because if the trend line, we have a second one, that's the red one, so usually they're bounce and they play together. So if this trend line, if we break this one, play safe, because that could initiate and trigger a really sharp price move to the downside. That's it for today. Have a lovely weekend. Enjoy with friends and family. Take care. Big love. Your Inspo. We will see us Monday again. Bye bye.